questions, comments, and
I mean, I had a quick two questions actually.
sure, Jean-Claude.
On the first one is on your trade, the butterfly trade that you showed us. I mean, the risk return was great, which was 1 to 4, and you obviously based it on the pinning strategy and your experience that you think it would stay at the 3,500 level. But
Yeah.
what was the or I don't know, did you even look at it, the probability of the trade ending up in the money?
Very
Just
good
out of
question.
interest.
Yes. So, um, again, this was a very strange week, Jean-Claude, because the expected move, we stayed so out of it. So it would have been a good idea to maybe do vertical spreads and sell calls or something. But we had such a big momentum that it really didn't help us much. So in a normal world, yes, I think we've just last 2 weeks have been such a worrisome. So I'm hoping the more closure we get, the more what we are doing, it makes sense. So I can't wait to have a little normalcy so we can apply all these. So no, I did not look at the deltas, and I didn't, all it was, it, and we've talked about, this was just the pinning strategy based on, first of all, my, again, experience on the round numbers, but also you can repeat that with, I use, like Apple used to be great. With Apple, if you look at the Pain Max, Max Pain option site, and it gives you some ideas, or you look at where's the biggest open interest. So based on that, if you're more positive, if it's like a higher amount, like I looked at Boeing, for instance, and then Boeing just kept um, Boeing just kept moving. So basically, we just discounted that. But that one, if you're bullish, you do butterfly call. If you're bearish, you do butterfly put. If you're neutral, then you can do iron butterfly if you want. But the beauty of the butterfly is it's a debit. The negative thing is the probability is low. So you still can manage your risk, which is very low risk. You can be profitable, but the odds of happening is less than if you did, let's say, Condor or Iron Condor, because you have a wiggle room. But yeah, so I didn't, the short answer is the expected move was out the window. Sorry to say that. And that didn't help us.
So it was, so you're saying it was it would have been a lower probability trade, but because of your experience, you knew that it was going to end up in that price range.
Yeah, I mean, that doesn't help, but you will. I mean, it's like it was more of a round number. We had such a big move for a whole week that I thought it will be, I was looking at option makers are gonna just make you pay. But that's why I use a 2.5 spread. So we still have a good room, and it was based on, actually, this might help. So you can see I've had my ranges, and we stayed within the previous day and the same day. This one, we just basically stayed. That's when my wings came. So it wasn't just shot in the dark. So these were my wings right here. As long as you would have stayed inside this, with the, so I looked at the Thursday and Friday, I would have, it would have been good because of, so that's how my wings came. But also, how much of a profit you want to make. You could have gone to 5 and made a lot more money.
Yeah.
It's actually not that much.
Sean, can you, I don't know who, yeah, if you can mute. Thank you, Jean-Claude. I hope it answered your question. So.
Yes, it did. Thanks.
Of course. You're welcome.
And the other one was when we have a breakout, let's say you have a range, top and bottom, and it's either trading at the top or the bottom of the range, and it breaks through. So either you trade the breakout and it goes on out, or you can trade a reversal down to the bottom, right? And you mentioned how you had the 2-bar confirmation once it breaks through for it to continue going up, let's say. Are there any other are there any other technical indicators that you look at to see whether the breakout has enough steam to go through or not enough steam to go back down?
Absolutely. No, that's a great question, and that's a very important question. So basically, I mean, something like gold, and that's why we use the squeeze, right? So that's what the like the Bollinger Bands are narrow. But let's try something that's not, you know, momentum oriented. I use something that we use all the time. So, um, like for instance, in the case of um, like S&P, because we use that a lot. The question, first of all, when it start expanding, we use that railroad track, so like this. But number that you have to use, I have hardly seen, maybe once I've seen some commodities has happened, but it never stays more than 5 bars outside the Bollinger Band. So because remember, we have the 95% two standard deviation, these are two standard. So right off bat, you know it's gonna come back down. So that's rule number 1. So, excuse me, if it's like we went outside this Bollinger Band, the idea is this is gonna most likely revert, and we use the candlesticks, and we know the first usually attraction is the 18-day, and if it stays and reverse back, you know that Bollinger Band is going to expand. To confirm that, Jean-Claude, that's what that squeeze works out really good, because the combination of everything is that momentum. But if you
Yeah.
don't have this squeeze and you just have this Bollinger Band besides the moving averages, we use the stochastics mostly slow. So what I do with the stochastics, so generally with the stochastics, everybody says 70 and 30. That means if it's over 70, it's overbought. That means it's really been stretched. That a lot of books write about, oh, you know, if it's, you know, don't buy it. Well, the idea is you can be, because the momentum is on your side and you're very strong, it could stay overbought for a long time. And that's why I use number 80 on a stochastics. And I use this right here, for instance. This is where we broke above and we stayed above. We call this embedded. Embedded means if it stays over 80 for 3 days, that means there's enough momentum that it's going to carry it. So what happens in this situation, first of all, we're above 18-day moving average. Although we are getting close, so we go to that upper Bollinger Band, that doesn't mean that it's automatic sell. But what happens, so we have the candle lights, I mean, the candlesticks are working. We are in embedded, that means we are still good to continue our holding. You can, first of all, you never short when it's up here. So we don't buy puts and you can see just because of this, because you know you were embedded, and because we were 18 days, we just stayed with this trade till approximately here when it broke down. We still didn't have confirmation here. And that's when this Bollinger Band started narrowing. So I did not get the confirmation to get out of it. Now we are squeezing. But what happens when you go to this, it's embedded till we get out, we don't have confirmation to buy this. So that's what we use. We don't use MACD, stochastics and Bollinger Bands and momentum. Those are the 3 things that I would use to confirm my trade, besides the, you know, if you're over 100-day moving average. Now, what would have happened if, like here, usually what happens if, let's say we broke down from the 80-day and now we're getting to overbought. If you're in the upper Bollinger Bands, the first thing we do, we're gonna go and kiss our 18-day moving average. If we continue, then we will go to the lower Bollinger Band. If it would have reverted back and we had the support at 18-day, that meant that we are going to go back to upper Bollinger Band. So this stochastics gives us that confirmation, knowing that whether we're going to go to the lower Bollinger Band, continue, or we're just going to have, you know, going to have a support at 18-day, and then we're just going to come back up. So that's how I use it. So I don't use it purely as a overbought and oversold. I use it as how powerful it is.
Okay, so for example, on the 12th, you have the yellow candle there, which is right at resistance.
Okay.
And then the next day you have the breakout, but because you're embedded, it's basically telling us that there's enough momentum for it to continue up.
Right. So
Yeah,
exactly on the 12th. Yes.
up
Yes.
there. Yeah.
That's exactly
Yeah.
very good. Exactly. So I wouldn't, but also that, it's not something that I would short.
No.
That I could lighten up a little bit if I was going outside this, but yes, I would not short, for instance, here because I still have embedded here. But for being embedded, you have to be above 80, and I emphasize that for 3 days. For instance, here we went there for 3 days. We were overbought. We went right here, and when this one got below that 80, that meant that it could go down and kiss the lower Bollinger Band. And
Right.
that's what that was our confirmation. If we would have turned around and go back up, most likely we would have stayed above the 18-day. And again, this is very narrow. We're in the squeeze and decisions. I think I probably definitely wouldn't have shorted, but because we broke, I might have bought an option for like hitting that lower Bollinger Band. Yeah, I hope that helps.
Yeah, absolutely. Thanks, Ramin.
You're welcome. Okay. Any other questions, comments? Comments for the Wednesday class, anyone? Okay. Silence, all right. Okay. Yep. Question? All right. Well, if not, we'll have the recording ready. I'll want to wish every one of you a wonderful, wonderful day, wonderful weekend, more sanity in the markets, but it will be exciting 2 months, I can tell you that. And hopefully, the more knowledge we get, hopefully it is something that builds confidence and hopefully helps you more profitable. All right. If there is no comments, I'd like to say, wish you again a wonderful weekend and a week ahead, and I'll see you on Wednesday. Thank you so much, everyone.
Bye.
Thank you, Ramin.
Thank you.
Bye.
Same to
Thank
Ramin.
you.
Bye. Bye, everyone.
Bye.
Bye.
Hi, thank you.
You're welcome, team. Bye.